What's up, YouTube? Still Catch Paulia sitting on the couch, making some money, investing in fractional real estate online. I'm looking at another property, this one in Harvest, Alabama, another one on Lofty. As I mentioned, I think in the last video too, I'm hoping to do another one on Mogul soon. I'm just waiting for them to upload their analysis for the most recent property that they have, but hopefully that'll come soon. But I spend a lot of time on Lofty. There's a lot of interesting things on here, and I think many of the things that I would want you to make sure you're looking at on any of the sites are the same things that we're going to look on at any platform. And so, hopefully you don't mind. And if you're having a lot of fun on this one, like I am, um, hopefully that's working out for you. But anyway, this is one. There's a couple of things. Again, I'm not going to do a full due diligence video on this one. I'm going to just show you a couple of things to really look out for. One is really, just to point out that whenever we're checking out markets, um, you shouldn't rely too heavily on any one data point. And I'll show you what I mean by that. It's something that it's a mistake that I definitely lean heavily on certain things. But it's important to look at more things than just one or two metrics at any time. And then the other one, I just want to show you something a little bit funny that the owners of this one did. I don't know. We'll get into that in a minute. But first, I just want to talk about, okay, so this property, it's a single family home. It's been rented out. They have a nice full reserve. It's a pretty low rental yield because it's owned free and clear. And so basically, it's paying out at the cap rate. It's not paying anything this month. I'm not 100% sure if that's because there was a turnover, because there was a turnover and they moved in November. So I think that in a few days we'll start getting paid, because that's how it kind of, there's always like this little delay. So I think they had a couple months of vacancy. But they have, let's see, I always like to look at the operating reserve, and they have a very full operating reserve relative to the price of the home. This was one, so it's very, very low rental yield. So the reason I'd want to look at this is, if I thought it was one to hold for long term, if there was decent appreciation. It's not a very discounted token. Looks like maybe it's a little bit lower than it could be. But it's not the deep discount, so that wasn't the strategy. This is one I was really looking at. So Harvest, Alabama is in the Huntsville market. And so it's one that I know is growing fast, and I wanted to take a look at. And so, as always, went to Wikipedia first, taking a look at, it's had amazing growth rate. But anytime you have a really small town, it's pretty easy for that to happen, right? And so, yes, it's more than doubled since 2000, but it's happening because there was just a tiny little town. But so then I looked at the county that it's in, to get a little bit bigger, and they've had tremendous growth at the county level too. And then looked at the MSA, and again, let's see, right here, we've got, again, it's been growing very fast. Now, it is a relatively small MSA, and it actually ends up being lumped into a combined MSA, or a combined metropolitan area, something like that. But I mean, I think this is big enough that, seeing this growth and this, I got pretty excited. I thought, oh, wow, this is one of the things that I'm always looking for, right? You want a fast growing market. It implies there's, demand growth. And so obviously, well, maybe not obviously, but so one of the next things I want to do is, look at the value of the property relative to token price. And so, at the current token price, let's do here, broke it. Let's get the calculator going while that waits for, let's see. Oh, that's really great. There we go. Okay. So at the current token price, $39, there's 6,645 tokens. So 6645 times 39. So it implies a 260 price. Okay, not a huge discount. And especially once you pay fees, you're basically paying full price for the property. And especially one thing that I jumped right out to me is like, okay, wait a minute. They bought this for 292. The Redfin estimates 282. I checked Realtor. Um, Same thing, 292, and their estimate on here 285. Uh, and I looked at Zillow as well, and it was 292, 282. And so, like, when you have really tight numbers like that, right? Oops, 282, 285. I just deleted that one, 282. That's when I tend to trust these online platforms the most, is when they're really, they're all clustered around the same price. So that made me want to see what's going on, right? So I looked in this, the Zillow price trend, which I always like looking at these. And this is disturbing, right? Like we've seen a dip in almost all of these that I've looked at, but this had just the dip and then it just stayed flat, right? It's been flat since, you know, April of 2022. Uh, Around this time is where all the market or most markets peaked in the U.S., but it is a lot of them had this dip and then have started to grow again. This stage very flat, and it's like, oh, okay, this is a small part of the market. So I thought I wanted to look at where it sits in relation to Huntsville in general, and you can see it's kind of out there. It's not, it's not right by the city. It's not super close. And one of the things I like to do is just see, how far it is from the downtown of the major market. Let's see if we can get that. Yeah, so okay, 23 minutes. That's not a lot of that's not a long drive, although that is right, it's midnight my time, so there's no or I think it's 1 o'clock there probably. I think they might be Eastern time, maybe not, I don't know. But anyway, it's in the middle of the night, and so there is no reason to think you'd hit any traffic. So yeah, it seems like a decent commute, but like if you look at all the green space, it's really clear there's a lot of room to build. And so I thought, okay, maybe that's what's happening here, is there's just like a lot of building. But then I thought maybe want to look at the market as a whole too. And so looking at the whole market or the Huntsville market, which it doesn't include Harvest, right? This is just Huntsville. It is doing the exact same thing, right? It's been completely flat, a little dip and then really just flat, and even down a little bit this year, down 0.5%, and this one was down. I mean, this one's down to percent, this one's down 0.5%. Um, there's definitely something going on here that I don't know what it is. Obviously you've got tremendous population growth, uh, coupled with really flat housing prices, and that's a weird combination. The only thing I can think of is that they're doing a tremendous job building here. Maybe they're pumping out a lot of homes. And if you look at this, right, I mean, there's plenty of room for them to be doing that. I mean, it looks like you have some maybe mountains or hills. So you've got a river. So you've got some, you know, some barriers, right, that keep you from building too much. But if you really just look right around here, I mean, we just have so much green space. Um, that's my guess. My guess is there's just a ton of new construction, and that the new construction is just sort of, they're just sort of keeping the houses, uh, keeping the prices somewhat depressed. That's happening in a lot of markets, even some that are really rapidly growing, like this one. If it is, if the builders had been prepared for them to, been prepared for this growth, and we're just building faster. I'm not sure that's what's going on. That's my guess. But one of the things, if all I had done is gone in and looked at population data, which is like, I've mentioned lots of times, that's my favorite piece of data. And I made an investment just based on that, I'd be in big trouble, right? So, well, maybe not big trouble, but I'm not going to be making a great profit because, okay, I'm not getting a great rental yield. And I'm also, now I can see, even though this projection, let me show you what they do there, right? They're adding, well, you can actually just see it adds, um, no, let me show you here. So what they're doing is saying, okay, we think there's going to be 1% appreciation and a 6% rental yield. Well, actually, if you looked at this last year, we had the housing prices go down. Oh, I'll move that back up. The house price went down, and you had a low rental yield. And the year before that, I think it looks like the prices went down a little bit. Sorry about that. My recorder froze again. I don't know why I keep having problems with this screen recorder. I think it's probably because I have a million tabs open every time I do this. But I was just saying you had no appreciation and actually, decrease in value and just okay yield, right? And so this I think would have turned out to be not a great investment. Um, unless the population growth takes over and becomes a bigger driver of appreciation going forward. Um, I wouldn't be surprised if that happens sometime in the future, but when I have a trend like this, I'm not super excited to jump in with a relatively lower yield compared to a lot of the properties and without really seeing that, that appreciation on the horizon. But one other really funny thing that is keeping me away from this one, and I think, uh, it you really have to read all the notes and pay attention to what the other owners of the specific properties are like, because you have to remember you're making decisions together with them on what you're doing. And so, um, the a year ago after they signed a lease and they had a tenant in there, they had proposed and they had a nice full operating reserve, and so they proposed that they use some of the operating reserve to buy some of the tokens and then burn those tokens. So like just basically get rid of them. And so that increases everybody's ownership in the property by buying some people out. I don't think it's a terrible idea, especially if your token price is low. But they voted against it. They said no, we don't want to do that. Um, and so they didn't. But then, a year goes by, not a lot going on. They get some new turnover, some new expenses, get a new tenant in there. And somehow, and I couldn't really figure out what went on, but their operating reserve got a lot more full. I think their goal is only to have about 15,000 in it. So it got really full again. And so what looks like the same owner uh, proposed taking 5,000 of that reserve and sticking it in Bitcoin inside the reserve. And this just seems really silly to me. If you look, what's one thing that's funny is, on Twitter, this is the guy Jerry Chu who is the founder of Lofty. I think he's doing a great job on the platform. I am critical of it a lot, but I think that for something brand new, I'm enjoying it a lot. But one of the things he really celebrated this. He's like, "Look, guys, you could do anything that you want inside these DAOs, which is the entity that holds this property." We've got this one group that's buying some Bitcoin, and he did say, whether or not it's prudent or a good idea, it doesn't. They're not there to judge it, but that you can do these things. To me, it just seems really strange, right? Like if we have too much money in the reserve, like more than we need, just you can distribute it to the owners, right? Like there's no reason that you can't just do a distribution to the people who are holding it. But I think that in the argument against that, I think that they had is like, well, no, we want it there in case we need to use it. Um, which is fine, but they have a couple different ways that you can get money into these things if they need money. They can take a loan against this universal lending DAO that's on the platform. They can do a capital call, and so there's not really this worry of like needing that extra money. And then if I'm having or if the point of me having a reserve is if I need money, it's there. And so if I'm going to invest it somewhere, I'm not going to put it in something that has a price that fluctuates so wildly. And this investment happened in the high 90,000s in Bitcoin. And so, I know a lot of people are bullish on it. It could certainly go significantly higher, but in the meantime, it could also go significantly lower. I mean, it fluctuates a lot, and um, and you don't want to need that money at the time that it's down. So if we really need the operating reserve funds, putting them in something so volatile doesn't make a ton of sense to me. If you don't really need it, distribute it to the owners and let them invest it how they see fit, right? Like, I mean, there just seems like there's no good reason to do that. Just like at the same time, there was not really a good reason for him to propose, hey, let's buy those tokens and burn them, right? Like, so you have someone who owns. So you have a partner in this property and so you had 66, almost 67% of the people vote yes that they wanted to do this Bitcoin. And so one of the things to think about is that means 33% didn't want to do it, but they're stuck doing it anyway, right? So you're sort of trapped in some of the not great decisions by other owners. And I mean, I think this one is pretty, um, it's pretty benign. It's not the end of the world, right? Because they still are keeping $15,000 in cash and then another 5,000 that they're putting into Bitcoin. So, not the end of the world, but it is just an odd choice to me. And it's one that, if everything else was perfect about this property, it certainly wouldn't keep me from buying into it. Okay, so we've got maybe a quirky owner who's like, a little proactive and just wanting to do some stuff. Um, I'm okay with that. But if I'm also not getting a great yield, not expecting a ton of appreciation, or at least not, during any sort of reasonable holding period, um, and we're doing some stuff that's a little bit odd, I don't know. That's enough for me to not want to do it. I did want to mention because it made me think of it because of Twitter. If you guys want to connect with me on there, you're more than welcome to. I know a lot of times YouTube is not the best place like to interact. I mean, you can comment in the videos, and I love it when you do. But some people have reached out to me in other ways. I'm always happy to talk real estate. Uh, you're more than welcome to send me suggestions or criticism or anything related to the channel. But if you just want to talk real estate in general too, feel free to connect with me on here. You can just search my name, and my handle's actually just J Ketchapalia. Um, Figured I'd throw that out there. The other thing, please feel free to like and subscribe if you haven't already. My channel has been growing a little bit, which is interesting to me. I really, what it's already done is connect me with a few other somewhat like-minded individuals who some are already, are investing on this platform, and I think that, um, I think there's a lot of opportunities to work together with other owners to sort of put together a good plan to sort of sway the direction or, change the direction for certain properties. So one thing that you can't do on here is say, I can't go and buy a controlling stake in any of these. I think I'm limited to no more than 15%. It might even be 10%. I'm not sure. And so if I want to, control the direction of some of these properties, if we want to buy one and do something interesting with it, it's really helpful for us to do that as a group, right? So if there's others of you who invest on here and want to connect and talk plans and have some ideas on what to do, I'm all for that because I think that that can only help us overall is to have sort of more educated investors in some of these and and in general I'm just a real estate nerd and like talking about it anyway. I mean, I'm just sitting here talking to my laptop about it for 30 minutes every day. Um, just recording it and sending it out into the world. But yeah, anyway, if that's something that's interesting to you, feel free to reach out either through the comments, through YouTube, or like I said, I mean, that my Twitter, I'm on there way too often, so you can definitely find me there. And if you have specific properties that you're looking at on Lofty, or Mogul, or even some of the other platforms that I decided not to invest on. Even though I'm not on Landa, I'm not on Arrived. Um, and any of them, if there's property and you say, hey, thinking about investing in this one, is it if as long as the data is public, like I can go and look at the deal, I don't mind, doing a deep dive and doing, similar, maybe just stick a video up just like I'm doing for these, if you think that's helpful. That's what one of the things, really just trying to, I know I talked about this early on when I started doing these videos, but one of the things that I think is problematic and what's keeping this industry from growing is most of the people that I see that are investing in fractional real estate are not real estate people. And most of the people starting the platforms aren't either. They're tech people. And so there's a lot of really bad real estate decisions being made on this platform and really on every platform. The best one, it appears to me so far, is Mogul as far as their actual real estate experience. And the two guys that started it have a good pedigree, like they came from Goldman Sachs real estate private equity group. They don't have a real depth of experience. I mean, I think both of them were there like 3 years. And so, it seems like they're picking good properties. I've been pretty happy with them so far. Well, but it's really early, so I'm not fully endorsing them. I think it's only time will tell if those really work out. But there's not anybody. I can't find anybody who has just like really, long-term, deep real estate knowledge, has done a lot of deals. That's talking at all about these things online, and I think they're going to be the future. But a lot of people are getting hurt by investing in, really just terrible properties. And you can see that from some of the discounted tokens on here already, right? Like, I mean, people that bought the first batch of properties that were on Lofty, like, they basically all lost 50% of their money. Like, I mean, I don't know. All is an exaggeration, but if you bought a wide, some of them got lucky and did okay, but the majority, I think, got hurt, right? And I think that that's true. It definitely looks true on Landa. Like when I spend some time really looking at Landa, um, a lot of people that I talked to on there hadn't gotten dividends in a long time. Um, Trading had been halted, so they couldn't sell stuff. So that seemed true. A lot of the properties on Arrived, I think, are decent. They just are relatively low yield, and I think it's because of their fee structure just eats up so much of the profit. But anyway, any of those ones, I'm happy to uh, talk about it, share info. If you've got if I do videos and you've got info for me on the market or the property itself, I'd love to hear that stuff too. That's about all for today, though. In any case, until next time, I will keep making mistakes so that you don't have to one.